in this video I want to show you something that will actually help you, and then I will be teaching you how to identify where the liquidity is in the market that can help you to avoid the trap. And also, probably we call liquidity inducement all sort of names, but what actually moves this market is nothing but a liquidity. So, and once you understand where the liquidity is, you will be able to know where to position and how to increase your profitability. So, this card, GVP card in the daily time frame. If you're a swing trader, this video will actually help you. And day trader can also benefit from this because this movement in the market is not about the time frame. Whichever time frame you are into, you will definitely experience the same thing, view the market the same way. So it's not about the time frame. So the difference is just like as a swing trader, your trade might take little time to play out and the levels might be stronger. But as a day trader, we have a lower time frame trader, maybe 15, 5 minutes and so on. You might have noise in the market. So let's dive into it. As you can see in this video, market gave us this level. We close above here. Let me map it for you. So as you can see, this is a daily time frame. If you open your chart and you identify something like this will serve as a break of structure. Why? Because I said break of structure has its own characteristics. Break of structure must have a valid inducement. We have a small inducement here, which is called valid pullback. So once you identify that, that will help you to know that this break of structure is valid. So without IDM, without liquidity, market is not really going to give you the remove. So that's why you have to wait for the right time before you can enter the trade and ride it to the next level. Look at this. When the market is done pulling back and want to take out this external liquidity, which is break of structure, you can see the major move that the market did was this. This is the major move. All the other move inside were very, very small. So this level will serve as our major liquidity. So if you're waiting for this to happen, that means market will need to come back and take out this level before you can be looking for entry. And understand that once you understand the structure, you will know that this level will be protected because this is the last low that the market created. So when you know where the level that the market is going to protect, then this will give you upper hand in order to know how to engage in the market. Look at this. This is a liquidity now because market need this liquidity in order to give the real move. So if you pay attention to this, you will discover that the moment market take out this liquidity, you discover that market gave this right impulsive move that is very, very sharp compared to this one. So this one is small. You see how big this one is, and the market actually move in that direction. So let's continue. As you see, market did what? Market break this level again, which confirm our break of structure. So if you notice something here, you will see that after market came here, meaning these are minor liquidity. Don't be trapped here, most especially if you are a swing trader. These are minor. These are minor. Market will look for the major liquidity before market will move. So, and as you see, if you look, maybe you have a level here that market came to mitigate, but this is what is important to the market. It's not necessary that if you have your other block here, market do not promise you that it's going to mitigate your other block. So you don't need to be trapped with that. first and most important thing is where the liquidity is. So if you're doing that, you can come here in your maybe lower time frame, 1 hour, 15 minutes, or any time frame you use as a lower time frame. Then you can look for your entry confirmation here in lower time frame. So, and this is the next target that you need to target, because once market gets above this level, we can expect another movement, either to pull back majorly or minor. So, and if you pay attention, you come down after you have break of structure, it means that this is the new low that will be protected. Why? Because this is the low of the new structure. So if you look at this, you will notice you will notice something like this. You will notice what market did here. Look at this movement. You have to pay attention. Push up, then correction, very minor, minor, minor. These are the major moves that market did after breaking or before breaking this level. So all you need to do is, where is the major pullback before the market, the last major pullback that the market did? You wait for this. So it means that for whatever reason, you must wait for market to take out this low in pullback while pulling back. Look at this. Let's say market do something like this. What is important is this. It doesn't mean that market will return immediately, because in some cases market will need more. Remember, this is another low level that liquidity rests. So market will need more. But in order to have a confirmed break of structure, at least market should take one pullback out. So, and as you can see, market actually took out one, which is the recent one that we call our liquidity, or probably our inducement, or whichever name they give it. You will see that immediately market do that, we break above this level again. So if you're looking for an entry, you wait after market take out this level here, then you look for your lower time frame confirmation. If you're trading, if you're looking at daily time frame for your higher time frame, which is some people, let's say you are doing top down analysis, you can do this in your daily time frame. Then you trade in that direction in the lower time frame. So let's move on. You can see that we have another break of structure here. So if we are to trace the movement again, you will see that this is the movement that the market did before he actually gave us the major pullback. So if we are to look at it now, this last one is what we call inducement. Then, as I explained here the other time, you will see that in this one, when market take out this last one, he reacted because he has gotten enough liquidity to continue pushing up. So, and you see, when market failed this one, it refused to react because it need more liquidity. Remember, we have another one here. So that's why market decided to push down. But what will protect you is, you will know that this level must be protected. So the idea is, before you can take a trade, whenever markets take out your inducements in daily time frame, your liquidity in daily time frame, all you need to do is to go to your, probably your 1 hour time frame. Once you get you switch to your 1 hour time frame. Now in 1 hour time frame, this will look like temporary bearish. So all you need to do is to be waiting for when the 1 hour will change, give you change of character or market structure shift to the direction of the daily, which is the up. Then that's when you will know that this temporary pullback, which is a temporary trend in 1 hour, has done. Then the market is ready to push up. So this market, I don't want to talk about the POIs in this video. I just want to tell you the power of inducement. So, and as you see, what market did next was this. You see, break this level. But this level, market refused to close above it. First attempt, market gave us liquidity sweep. So In this case now, we wait until market close above this level. Once market close above this previous level that gave us liquidity sweep, that's when we can now confirm that we have valid break of structure here. We use close candle, not wick. So when weak happen, we stay away because market might grab a liquidity here and come back and mitigate the extreme order block and continue. So you don't want to be trapped in that scenario. So look at this. Immediately we have that, it means that this is our break of structure. Then what is the next thing? First thing is to understand that market is going to do what? Protect this level. So what are you going to do next? All you need to do is to trace from this level. Let's say what the market is doing. This is just the movement of the market, and you see, and market finally push up. So in some situation, market can still push up again, like doing this and push up again until you have a movement that take out the first last push up, like last correction. Then that's when you can say, okay, this high has been confirmed. So but in this situation now, we don't have that. So this is what the market did. So and that's what we are going to work with what the market actually gave us. So it means that this will serve as our inducement. Inducement is a situation whereby is there to guide you. Once you are able to identify it, is there to guide you for early entry. Is there to let you know that there are liquidity resting below here so that you will not be part of inducement. So those are just the old stuff. So if you understand the trap here, you will be able to avoid it and probably increase your profitability. So look at this. This level must be protected. Look at what market did. In the first attempt, market actually take out inducement, mitigate something here and try to push up. Remember what I said, we only agree that the market breaks structure after what? After market candle close above here. And you see market refuse to close above here, maybe it creates equal high, and then before you know it, market keep pushing down. And as I said in the previous explanation, market might be looking for extreme order block. One, remember, this is also a liquidity. So yours is to wait for the first one and then look whether you have a lower time frame confirmation that confirm that the market is ready to go up. But this is also a liquidity. This is the one we reckon with, but we understand that market can also come here. That's where the POI comes in, point of interest. So we understand the POI that actually hold in the market or that has high potential of holding in the market, because it's all about probability. So once you understand that, then all you need to do is to wait for market to take out your inducement, then wait for market to come to your POI, then wait for your extra confirmation, maybe with lower time frame confirmation, then execute. Then that will improve your profitability. So in this case now, you can wait here for your mitigation and lower time frame confirmation. Then you ride this market to the top, and you see this when we finally have break of structure. So that's just all you need. If you look at it, it's very simple, very self-explanatory. You just need to pay attention to it, and you will see the difference in how you perceive the market. So that's it, guys. Thanks for now. If you have any other question, you can drop in the comments and give me a like and follow this channel for more content. Thank you.